Self-employed borrowers. What's the big deal? Well, I can tell you, self-employed borrowers in the mortgage world sometimes can be a more complicated mortgage. And throw COVID in the mix, and man, do we have a pile of stuff we have to get, unfortunately. Here's the good news. If you are working with an experienced lender, a lender who has a lot of underwriting experience or background, or at least knows what all of those guidelines are, and they understand what they're looking at when they look at your tax returns and they look at a profit and loss, you are going to be in a great position. But if you're working with a lender that just had the best rate, on the internet, and a lot of times those people, those loan officers, they're not experienced in the world of self-employed borrowers, complicated tax returns, and you can really find yourself in a mess, knee deep in the middle of your mortgage process, which is the worst time to find out you have a problem. So let me give you a couple of pointers and things that are really important right now for self-employed borrowers in a COVID environment, post-pandemic environment, during, pre, post, who knows where we're at right now. We've had so many variants, but the guidelines have remained all since COVID started, and they've not been lifted. And this is what we have to do today that we didn't always have to do for a self-employed borrower. We are in 2022. We're going into the 2021 tax filing season. People are now starting to file their taxes from 2021 now in this first quarter of 2022. And what we're seeing with self-employed borrowers is that a lot of people either made less income in 2021 due to COVID. Some people made more income. It really depends on what field you're in. But you really need to be careful with those write-offs and with what your net income is going to look like. There's all different reasons why we're seeing income has been disrupted or changed from previous years. My recommendation is we are telling all of our clients, we would tell you, have your lender, have us as your local lender, look at that draft of your returns before you file. Because if you are hoping to buy a home or refinance, and you are wanting or needing to use 2021 income to qualify, you will either need to make sure that that income will be in line and it will be okay. Even though we understand what's happened, good explanations, packaging that file properly, getting your lender's take on it could really save your loan. The problem is that lenders, Fannie Mae, Freddie Mac, investors, they do not like declining income. And again, sometimes we're seeing the gross income go up, but the net is lower due to new expenses they didn't have before, more employees, more expensive employees, more things that they have to do to stay compliant with COVID, whatever it is, cost of goods, supply chain. There's all these reasons. Show your lender, let's get our eyes on it and help you make sure that you're going to be in a good position if you file those returns with all of the write-offs you're showing, etc. The other thing is in the COVID environment, if you file an extension or you have not filed 2021's taxes yet, you are still going to have to provide a profit and loss to the lender. And the underwriter will want to make sure that that profit and loss is in line with previous year's taxes. So again, if income has changed for some reason, whether it's the gross, the net, the expenses, just let's get some eyes on that and make sure that it looks and reads in a way that's going to help you get your loan, or at least that we can explain and put something together and make sure that that's going to work before you find yourself in a contract or in the middle of a mortgage and all of a sudden you're having a problem. So lots to pay attention to there. It's not, the days of old where we just put in some income and, hope for the best. That ended in 2008 for sure. But, we definitely have seen an increase in scrutiny and concern for self-employed borrowers through COVID, just because of so many people having issues with having to shut their business down or not being able to operate fully and making less income, which would not allow us to average a decline there, higher income previous to now. And we'd have to get a good explanation. And it has to be in a certain percentage that's allowed. And you want to make sure that your lender understands what they're looking at and is able to help you so that you, again, don't find yourself in a bad position down the road midstream of a loan process. So give us the call here, the Oddo Group, Luminate Home Loans. many years of experience, many years of underwriting experience personally, my team, all very experienced. And we really make it a point to make sure that we look at, especially self-employed, all that income up front, get you fully pre-approved so that you're not out there, making offers on a home only to find out that you have an issue. A lot of people, all they think about is lowest rate, lowest rate, lowest rate. The problem with that rate shopping online is a lot of these internet lenders go out with a bait and switch rate. They're not qualified to pre-approve the loan up front. And then you find yourself down the road in a really bad place. And we get a lot of those calls, and we just hate seeing that. So, we hate seeing mortgage drama that could have been avoided. Give us a call. It pays to work with somebody with experience. Michelle, Oddo, the Oddo Group, Illuminate Home Loans.